And with that, welcome to Equity Ownership and How to Negotiate It. I'm Natalie Levy, the founder and managing partner at She's Independent. We are a women first investment group, She's Independent Investments, and thrilled to, host today's session. Whether you're joining us live, whether you're catching the replay, we're all about education and access. So again, very excited that you're here, want to get your questions answered, want to make sure you walk away saying, I learned something, I uncovered something, I'm excited to step into, my power and influence around negotiating or, what is equity ownership. We're going to share, a lot of content. Today's session, of course, will cover some basic concepts, some more advanced concepts. Can't cover everything. We're here for an hour. Oops, let me move that. But basically, we want to make sure that we're engaging you. So for those that are on live, ask questions, let us know what's up. My background, I have an institutional finance background spanning Wall Street, private equity, angel investing, of course, which I do very actively today with She's Independent. And I've also done a lot around negotiations. I've been an enterprise business to business seller. I've negotiated on behalf of myself. I've coached others. We're talking not 5-10% year over year, type increases, but 40+% year over year, 40 plus. Equity packages where, I was offered 10 basis points, meaning 0.1% for big rolls, and I got 1%, 100 basis points. So we're talking about big increases. Basically, I have, the background. This isn't some MLM to say, I learned from somebody. Of course, I read. Of course, I, see what's out there, but this is real life experience. So what are we covering today? We're going to go into a bunch of different concepts. First, I just want to give a quick check-in, why we're here, why you're here, a little bit about me, because I think, uncovering your why and just making sure you keep that with you is so damn powerful and influential. And yes, I may swear a little bit. Apologies if I throw you off. And gosh, why am I wearing a fun kind of party top to this? Because guess what? When you step into your power and influence, you can do whatever you want within reason. Negotiation framework. We'll talk about, some of those basics, some strategies, some biases, things to be aware of, how to use them to work for you, not against you. We'll talk about defining equity. What is equity ownership? What are options, right? Because if that's terminology or nomenclature that you don't know, there's no way you're going to be able to negotiate it, let alone understand it. Finally, those real world examples where, again, today is geared a little bit more towards executive professionals, but anyone's welcome. I can't tell you how many times I hear of women or folks from diverse backgrounds saying, oh my gosh, I stepped into this, board or advisory role. And when they ask me what I think about it and, the value in, do I think there's going to be an exit? When we start talking about it, so often these individuals say, oh, you know what? It was a little bit more charitable. It wasn't something that had real ROI or return on investment on my time. So let's talk about that. And then finally, where to go from here. So why are we here? I'm sure, y'all are aware of those gaps that exist. Everyone talks about the wage gap, but the equity ownership gap and the VC funding gap and where does money flow? Those are even substantially larger. The numbers I have up on this slide do not include the demographics of what if you come from a diverse background. So 83 cents on the dollar, that's that blended average. If you are a woman from a diverse background, you're earning even less on the dollar earned by a male counterpart. The equity ownership gap. So we're talking about equity today. How do you step into more equity? Places like Carta. And, there's a lot of companies out there that do things like cap table management. We'll define and talk about this stuff. But basically, who owns the business? Real ownership, not just the cash you get, from the job, but that ownership gap is substantial. 43 cents on the dollar for the male counterpart. And the VC funding gap, my gosh, it was at about 3%. The other year, it's back to less than 2%. Less than 2% of those VC funding flows are going towards women-owned businesses. It's atrocious. What businesses are being funded? What products are coming into our world? If we're designing seatbelts for men, if we're designing, medicine for men, what are we overlooking for women? What are we overlooking when it's white men that are, the demographic that this was built by or built for? And I'm not a man hater, and I'm not, an angry feminist. I'm an intelligent, informed one, let's say, right? And it's what's equitable and what do we need? And that's, by the way, why at She's Independent, we're all about stepping into those money flows and stepping into the how do we get more women and more diverse folks at that table writing checks, getting funding. And I've been in that man's financial world lacking representation. And I've been told, you're hot, you should be my, my side piece, or, when are you going to get married and stop working? And yeah, that was really frustrating. And sometimes it made me cry when I wanted to take down, that exterior. But at the end of the day, it made me stronger. And it made me say, I'm going to go inward, and I'm going to make this thing work. And I'm going to develop and build this voice and advocate. So when a company does something inappropriate, I say, hold on a second, that's not okay. And then they do something about it. I also have a picture up here of my mom. We're dancing in the Bahamas on a trip years ago. We lost her to suicide, and I'm open about this kind of stuff. After divorce, she never figured out her financial footing. I couldn't be more passionate, more deeply driven to say, let's change this stuff. Let's create a path to access and education. So more women, more diverse folks are saying, we're going to change the game. We're going to make it something where we can step into this and we can have influence. And so think about what is your why. And I know this is about negotiation today. And again, when you uncover and you say, my why is, it's not the thing that first comes up. Start, picking at that, digging into the questions. The best, future leader that you're going to work for, they're going to ask all these questions about you. And they're really going to dig into what's the core of you. If you haven't done that, do that with a mentor, with yourself, with a family member, with your cat, with your dog, right? With us at She's Independent. But when you really figure that out and I say, wow, we change, the way that women think about themselves, women of all ages, how we show up. That's so deeply powerful. And I'm not going to let that senior man, hold me back. And I'm not going to accept the, status quo of that low salary or equity comp or whatever it is. I'm not going to let them roll me over. And by the way, I do want to say, negotiation, really good negotiation, it's not just about steamrolling, but it's about you showing up and you doing the work to know what do you need and ultimately arriving at something that's really good for you, but good for both parties. You don't want it to be you didn't learn anything. It's a dance. And let's talk about a framework where you can negotiate truly anything. I want to start with information and research, because this category or this piece of that Venn diagram that we have up here is huge. You cannot overlook it. If you don't know the market price, the market comp, the market equity, the expectation of, well, what is reasonable? What am I worth? What are they asking? What are the expectations? What's the time allocated? All this stuff. If you don't do that work, how do you negotiate? Let me give you an example. If you're playing poker and you pick up your cards and you see what's on the table and you have these other players around there, who's ultimately going to win? Not necessarily that hand, but on average, who's going to win the tournament? It's the people that have enough knowledge to know what are the probabilities every time a different card is laid down. There's strategy and skills. That's another piece of the Venn diagram. But you need to know what's in my hand? What am I holding? How much do they want? These things. So where do you get that information? Research, right? Recruiters, mentors. If you could talk to, people at the organization, maybe it's about leveling up your current comp package, and you can talk to others, that you're working with. Maybe it's, board role, and there's others you can talk about. We can talk about some real numbers today, but it's educating yourself and it's proactively, figuring this stuff out. Also, it's getting information during the negotiation. It's asking questions. If I ask a question or if I throw out a number, and let's just say it was a crazy number, I go in and I say, I need $300,000. And they say, we budgeted 150 for the roll by, basically, and just they go quiet. Going quiet is bad, okay? If you're in the ballpark because you've done the research and you say, hey, you know what? For all these reasons, I need, 200 and they budgeted 150, but you're a rock star. And they give you information or they respond. And even if they say no, they give you information. That's information. So information comes from a lot of places, including the negotiation. Strategy and skills is probably my favorite category. And the book that I always recommend here, actually, there's two books. The really deeply insightful book is Daniel Kahneman's Thinking Fast and Slow. It's consistently rated, one of the best business books out there. It's dense. I'm a nerd. Nerd out with me on this, right? There's a lot of human biases that you may not be aware of. I guarantee you, if you read that book, you're going to learn a lot about how you think, about how other people think. And instead of them using it on you, or you just both kind of being in this muck of not knowing how these work, start to figure out, how do you use them for yourself? I'll give you an example or a few examples. One concept is called anchoring. Anchoring means in a negotiation, the first number thrown out, you get pulled to that number, or the negotiation basically pulls to that number. So if I say, hey, you know what? I need 200. 200 is what I'm worth. And, I've done the research and, my market value is 200. And if they say, you know what? We were thinking about 150, because you threw out the 200 first, you're pulling to that. If they throw out something, let me just give you a number. They throw out, hey, you know what? We love you. And, we were so excited to give you this offer. And gosh, are they going to say we love you? Probably not. They're going to hold their cards a little bit closer to the vest, but we want to make you this offer. It's 150. You know what you can do so that you're not anchoring, or the negotiation's not anchored to 150, is you say, listen, I'm so excited about this opportunity and the team and the culture. And, I'm a rock star and I really see myself there. But unfortunately, 150 is just, not in the range that I think is acceptable given my background, my skills, and what I bring. We need to throw that number, off the table if we're going to engage in this. Now, if you get rid of the 150, if it's not on the table, it's no longer anchoring you, right? So you can use it for you, you can use it against you. Some people say, never throw out a number first. I would say, if it's a really opaque or lacking transparency in that market, maybe you do want them to throw the number first. Be strategic, be smart about it. But again, if you've done your research, your homework, and you can be certain, confident you're not going to underbid yourself, you can start with something that's reasonable but high-ish, or higher than what you expect, but within reason, basically. A lot of other strategies and skills, right? Silence, using silence, playing with it. I shouldn't say playing with it. It's really awkward, but I'm going to give you an example. Angela, thank you so much for this offer. I'm thrilled to hear that the team, wants to move forward with me. I want to move forward with them. But, 200 is ultimately what I need. So I'm looking forward to hearing, if you can budge, but otherwise, I don't think this is going to work out. How often do you sit with that silence? Right? And basically what happens with silence, it's a little bit of this, mind fuck, if I can use that word. Again, I'm, on some pain medication, so go with me on this. Sometimes the terminology being a little off, but everybody wants to fill that space and void. What does that mean? The first person who speaks, quote unquote, loses, gives up information. Wait 10 seconds if you need to. Don't say anything. My dog right now is barking. Zoom might be filtering it out. She wants to fill the void. right? I'm joking on that one. But again, it's this, people are just not comfortable with silence. So you can use it to your advantage. I will also say the sleep on it, never say yes, is adjacent to silence, right? Do not just accept. What do I mean by that? Oh my gosh, they met you at the 200. Bells, champagne, however you celebrate. Bells, who celebrates with bells? The point is, what is that offer at 200? Oh my gosh, they don't have a 401k. My other company matched a 401k that when I contributed. They're not going to pay for reload. So make sure you sleep on this. Make sure that, if you are actually accepting the offer, you really want to feel good about it. And let's talk about a board seat for a second. A board seat, if you're going to be a professional, you are accepting that, planning to be in that seat for multiple years. It's okay if it's a startup and, maybe the life expectancy is a year, but typically with a board seat, it is a multi-year commitment or expectation, right? So do your homework if you're going to accept this stuff. It does not look good if you accept and then you try to say, actually, I need this other thing too. Or you accept and then you realize, you know what? You didn't vet it enough. You need to negotiate. You need to learn in this negotiation and dig in before you actually accept that offer. And the mindset and confidence piece, we have a lot to cover. So I'm going to try to wrap this up and move on. But the mindset and confidence, so much happens when you do that research and well, this is my value. The market says this is my value. Do I believe this is my value? Can you do the homework to say, hey, maybe I'm trying to level up with an existing role and I'm trying to get more comp, maybe, a bigger equity package, or, I've vested my 4 years and I want more equity. And we'll talk about what that is in a slide very soon. But basically, do you know the value you bring? Do you really believe it? And there are some hacks here, because I know a lot of times if you don't look like that executive team, it may be really challenging and you may feel, wow, this is a really tough ask when I'm in that room. But if you practice it so much, and if you very, succinctly figure out these are the asks and this is what I bring, and you dress the part, right? The job you want, not the job you have. If you do all those things, you're going to show up differently. And practice in a mirror, again, to a friend, a mentor, your dog. And just a fun one here in terms of getting into the mindset. I have a lion up here, right? Doing one of those really nice yawns, or call it whatever you want, a lion's breath. But I don't know if y'all, have done yoga or any of these kind of fun classes where, there can be this lion's breath, right? Where you just take a moment and it's like, let's just do it together. And I know we're going to look really crazy, but it's like, however you do it, get the breath in and then just like release it, like, right? And I know no one just did that. And so that's okay. I'm the crazy. But the point is, that just energized me to do that. What's the thing you need to do before you walk into that room to feel strong and powerful? And figure that out. All right. So now we're going to get into equity. What is equity? Let's talk about it. Again, we have a lot to cover, so I might try to, run through some of this. And again, I'm going to throw out terms and you're going to say, what is that? Ask me the questions. And make sure I have up the chat. So what is equity? Company ownership, real ownership. Not just them giving you that paycheck, but I am an owner in that company. I actually have a stock position or options. We'll talk again about, what these things are. I am an owner in the company. Doesn't necessarily mean you have say. That could be a little bit more, executive team, board, which is why we love women in representation on the board. Also advisors, right? Investors, all those people maybe, when we talk about kind of influence and real say, but ownership is, you are an owner in that business. You have equity. So if that business gets bought, if there's a liquidity event, meaning, oh my gosh, everyone gets paid something, there was M&A and blah, blah, blah. And, there's new owners, but, people who owned the business get paid out, you can participate in that upside. Possibly. Meaning, and there's a few meanings around this, there may not be a liquidity event. You may have, ownership in a business and it never exits. It could go defunct. It could, be bankrupt. I think, the other thing you want to think about is who are the investors? Because investors kind of run the show, and there's events called recapitalizations. And, basically these things where you might have been an owner, but you may not be an owner after new investors come in, or, some investor event. It is cheaper to give away than cash. Really good for you to know when it comes to negotiation. Why? Okay. Ultimately, they're offering me 150,000 of cash. And when I do the legwork, they make the equity sound interesting. It's only 20,000. But they're not paying me 20,000 cash. That's equity. I'm walking into a pretty solid role at this business. I need 75,000 of value of that equity. If you don't understand it, right, you can't figure this stuff out. And we're going to talk about that. But it's cheaper for them. They're not going to think about that like $75,000 cash. $75,000 of equity, it's different. We're going to get into it. By the way, Deb put something in the chat, and I just wanted to comment on it, and I love it, which is highly recommend getting to yes from her Wharton negotiations class. So getting to yes is interesting, right? Getting people yesing. There's a time and a place, absolutely. But I'm a big fan of checking out and trying different strategies, because the yes momentum, it's great. And maybe I'm interpreting what she's saying wrong, but there's a getting to know or hearing no, which is huge. Basically, back to negotiation. If you never get to know, if you never hear no, what did you leave on the table, right? That's huge for negotiations. Silence is bad, but no is great, because then you can ask more questions. And you didn't ask for 200 or 150, and guess what? They budgeted for 250 for a rock star, and you're a rock star. Oh, the book Getting to Yes. Yeah. Nice, Deb. I was like, I think that's a book, but basically, yeah, there's a ton of negotiation strategy out there. So it's good to be aware of different styles and different things. Okay. So let me move on from here, and let's talk a little bit more about, equity and ownership. I'm going to talk a little bit or speak a little bit more to ownership in private companies. There's all different types of ownership. If you are investing, so we do private investing at She's Independent. We're typically angel investing in these, early stage companies or private companies. When you think about, equity packages and options, a lot of you out there are working for private companies. Some of you absolutely are going to be working for public companies as well. But we're going to focus on private companies, because my guess is a lot of the language around, these packages and what you're getting, we can define a little bit about the public as well. But these private companies, they're typically the ones that the people in this room are going to be talking about. Oh my gosh. And these private companies don't have to be small, but oh my gosh, I have this board opportunity. How many of you are thinking about, stepping into a board opportunity, public company? That's a whole nother conversation. And you may not be able to negotiate that package, right? Because that's going to be something more standardized. But private companies, depending on, how big they are, negotiation is something you have a little bit more power around. So all different types of ownership you can step into, as an investor, or, I guess what could be offered to you. But a few different, types are listed on this slide. So one is shares and RSUs, restricted stock units. I have options kind of big and bolded here, because we're going to talk about that one on the next slide. If you're an investor, or, if you're stepping into even a board or advisory role, they may be offering you something like a convertible note or a safe, because they're like, we want you to, be an investor when you step into this role. We're going to talk about that a little bit. And there's, other debt instruments, but these are kind of the big ones that we are going to touch on, or I should say options is the one we're going to focus on. And we had one more question in the chat. Thoughts on advisory, scout venture partner roles being offered in exchange for carry. Great question. So let's talk about a little bit about the difference in these. There's a lot of different nomenclature or roles, let's say, that you may be offered. The first one that you mentioned is advisory. Advisory, think of it like a less structured board type of role. It's typically strategic and you're helping kind of ad hoc, the company around, maybe you're jumping on, one-off hour calls to make introductions or to review things or offer insight. Typically much less lift, almost always much less lift than like a board role. I think that in advisory role, oftentimes you are seeing carry or equity as, the only thing, and it's not typically cash comp, at least what I've seen in private companies. So what do I mean by that? I don't want to just blatantly say it's okay. You need to dig into the value. What's the value of, what they're offering you? So you need to reverse engineer or dig into what is the actual value of the offer. Scout roles, I've seen a lot of people getting taken advantage of. I think a lot of times it's them tapping folks. And let me define what a scout role is. So a professional fund, needs to source deals. And she's independent, which I'm, very excited to be, managing partner of. We have a phenomenal mechanism where we get deals from all of our members and plugging into different networks. But sourcing is huge because the more deals you see, the better investment decisions you can make. Because if you see, 1,000 deals and you're investing in 5, that's very different than seeing 10 deals and investing in 5. So sourcing is huge. Scout roles are basically go scout deals for us. And then if we invest in the deal, we'll give you something. I often see that the scout carry is pretty de minimis, pretty small. I'm not saying it can't work. In venture partner roles, again, I think I look at venture partner as a little bit like advisory, a little bit like fractional executive. And I don't love that one for carry, but with the right model, you could do it. I look at venture partner as you're doing more than being an advisory. I think the difference when I think about cash comp versus equity comp and what's reasonable, and I hope I'm not losing y'all, so feel free to ask questions. I think if you're showing up and you're doing, one-off work or even regular work, board work at a strategic level, and these are the hours and, this is what's expected of you, but you're not actually doing the thing. You're showing up in the room, you're giving insight, you're giving advisory thoughts. To me, the strategy kind of stuff, and if it's, growth company and they don't have the cash to pay, I'm fine with carry or equity comp. I'm sorry, not equity comp. Carry or equity ownership, not cash comp. By the way, what is carry? Carry is think ownership in a fund, so just a little bit different. But equity. I'm a venture partner and I'm spending 50 hours with this portfolio company or 20 hours with this portfolio company. I don't feel good with that model, not paying cash. Maybe you pay them less cash and you also give them some carry or, again, equity ownership. But to me, if it's a tactical versus strategic, execution versus strategic, it doesn't feel right for me. But everybody can make their own decision. But the most important thing is don't say yes if you don't understand the value in what you're committing to. That was a lot right there. And the fact that we're not getting more questions, I'm a little scared, but hopefully you're with me. So feel free to give me a thumbs up, high five, whatever. Oh, nice. Thanks for sharing that. Somebody shared a FAST agreement. There's definitely some frameworks and, baseline for this type of work and the stage of business. This is what we typically, see in terms of ownership, equity ownership, offered and also cash comp offered. So always great to reference, some of those market standards and also talk to mentors, talk to other folks. But let's talk a little bit about options because I think a lot of folks have questions ultimately on, what are these terms? and it's not just about options, by the way. This is also applicable to, some other forms of agreements, but let's talk about and break down options and then talk about all these terms on this slide. So first of all, I want you to think of options when somebody says, hey, you have, the option to purchase 50,000 shares, and they might call it 50,000 shares, but it's an option if you're stepping in as an employee, or if they're basically saying, hey, we're giving you this options package. It can be quoted in shares or options, but you need to dig into, what does that mean? What is the value? And you got to ask questions around that. So ultimately it's, well, what's the percentage of ownership? If I'm stepping in as a senior executive, or let's just say heading a division or a team, and this is an early stage company, there may be Series A or pre-A, that's a stage of financing, maybe they're seed plus. I don't want to know you're giving me 50,000 shares or the ability to purchase 50,000 shares as an employee. What's the percentage? And when you start asking questions, what's the employee options pool? What do the other senior executives have? What does the ownership look like for the business? What was the last valuation? What is these shares, or what is this options package worth as of the last valuation? Ask these questions, then you can start to understand, how you can negotiate this thing if you need to, which, let's be honest, you almost always can ask for more. What's the cliff? The cliff says, and the standard is 1 year if you're stepping into employee equity or employee options. A 1-year cliff means if you're not there for a year, you lose whatever that options package was, or that offer detailing out equity was. You have to stay beyond the cliff. What's the vesting schedule? Typically 4 years as an employee when you join a company, meaning at the 1-year cliff, you start vesting, meaning you start to own, or own if you decide to purchase. You basically can purchase these options when you leave the company based on some vesting schedule. So typically, straight line vesting, meaning 2 years into your 4-year vesting schedule, 50% or half is now, you own it. But owning options, again, it doesn't mean you own it. It means you have the ability to pay something to purchase the underlying instrument, typically shares, when you leave that company. And there's strict guidelines. The agreement may say you have to do this within 90 days or 6 months.
Natalie, do you want to talk for a second about, it's the valuation that is on day one of your employment? And theoretically the valuation is going to go up, but you get to buy at the original day's price.
Yeah. So we have a lot more to cover. So okay. It's a great question, Rachel. I'd say, and I was an options trader, by the way, on Wall Street. So we could talk about this stuff all day. I think, just for this discussion, it's a great point. It could be worth something someday. It may not be. Deciding, am I going to exercise this? How well is the company doing? How well positioned are they? All questions you want to dig into. Great point. Maybe there's going to be a taxable event likely if you exercise these things. So, there's a lot of information there you want to dig into. Also have somebody with a legal background, look at the agreement. There's a lot to dig into there. We're introducing some of these concepts to start to make you dangerous. And I do want to actually address a few questions that came up. Angela asked, how do you manage dilution? So you could negotiate and say, hey, I need the ability to, upsize my position, or, we need some way to protect against dilution, employee equity, and even, stepping into a board or advisory role. It's the anti-dilution thing that's really tough. I think I'll give you an example. As an investor, I write a check and now I'm an owner in a business. There's typically a clause where as an investor, I get the look or the ability to re-up, invest more to, protect against dilution. But employees, depending on what you're stepping into, that's a tough one. You can ask about it, and maybe, you're stepping into, and I'm gonna actually parlay a little bit into Megan's question, which I love. The vesting for a board or advisory role could be less than 4 years. You could ask for, say, 2 years, which is what I typically, advise around. Maybe after 2 years, then you re-up and say, okay, what are we stepping into now? Meaning, I need another package, right? I need some type of package here. And maybe you could negotiate to say, and I want, I don't know, I'm making this up. Maybe, there's a way where you can negotiate in where it's some type of anti-dilution, you get creative. They're probably not going to want to go crazy here in terms of being too creative. Maybe it's tough on the accounting side, but, you can always ask those questions. Okay, so Tina's saying, assume a company sells an average of 20% of the company per funding round, and the initial option pool is 15% for the first 100 hires. That's a guideline for what one's negotiating stance should be. So it's a great way to think about it. I've seen employee equity pools at 15%. I've seen it at 25%. That's why I think you asked the question. And by asking about things like, and we're going to get to this, I love it. It actually dovetails into the next piece or the final piece of the slide, the cap table, the ownership. If you ask, and as an employee, they probably won't do this if you're mid-level, low-level, but if you're senior, if you're an executive, they should absolutely show you this. As an investor, they absolutely will show you this, but ask for it. What's the cap table? What is the ownership structure? Let me tell you a red flag I saw the other day, since we have a form of red up on this slide, which is one of our colors that She's Independent. Company founder tells me, yeah, you talk about equity and I've given away so much equity, like I barely have equity. Red flag. You want to make sure that the founders and the key executives are incentivized and they're not giving away all the equity, right? And they're giving away a certain amount each funding round, but they have enough to keep themselves incentivized. So why are they only giving away on average, as I guess the quote that we got from Tina was 20% per funding round. Again, there's typically, if a company is private and they're going through multiple funding rounds, you can't give it all away. You need to give some away, but then you have to have a bunch more that you can hold on to, not just to incentivize, but so you can give more away and raise more later and later. Companies aren't going from A to Z, right? A, B, C, D, E. And when I say that, think of funding rounds. Companies that ultimately blow up, those unicorns, the ones that are going public, they're raising how much capital? How many different rounds of financing? By the way, a company may choose to take private equity, so a different type of money, and they may give up 75, 80% of the business. So it depends on the type of event. It depends on, ultimately, what are they trying to do? Maybe they want liquidity or, money out of the business. There's a lot that goes into this, but, really good points. Okay, so let's keep going. Oops. And move on from this. And next, we're going to talk about just very quickly, what can you negotiate? And we touched a little bit on this, but think of all these inputs, right? The cliff, the vesting schedule, the ownership. As an employee, even as a senior executive, I don't think you're going to be able to negotiate that cliff. Maybe the vesting schedule. Let's just say you're, walking in as a senior key exec and it's a turnaround. Maybe the cliff as well. We'll talk about that later. Ownership percent, no matter what the role is, you should be able to negotiate it. Exception. Maybe they've already raised so much institutional money and they have very key guidelines on, is there a range that you're restricted in terms of there's a maximum amount you can give for this role? You can ask those questions. But there's probably not a restriction, so I'll just throw that out there. But cliff investing, advisory board role, absolutely, you should be thinking about negotiating on that cliff, lowering it, and accelerating that vesting schedule. But truly, everything is negotiable. Title, reporting lines, bonuses, relocation bonuses, anything, right? thinking about car lease, buying a home, like everything's negotiable. So even though we're really talking about, comp and equity in this discussion and I guess stepping in maybe to a new role, just keep that in mind. And for the cap table, which we briefly talked about, we already, spoke to these points, but I want to dig into the valuation point. What is evaluation? What drives evaluation? Private businesses, what's the size? How big are they? Is it profitable? What story do they have? What potential exit? What will the investors pay? Or, where do they value it? I can't tell you how often there are bubbles in markets and, things are cyclical and something's in demand and out of demand. Think of public markets. Public markets, where will you buy that share of Microsoft or Apple or whatever? You, an individual buying one share, that's not going to move the market. But basically, it's the collective demand, right? It's the investor demand. Same with private markets. But it's opaque in private markets. Meaning, how do you figure it out? You can't always find the number, publicly, but you can absolutely ask. And thinking about employee equity versus advisory equity, we've talked about some of this, but some key questions to think about. Employee equity. If you don't know their funding, their traction, things like runway, meaning, how long until the lights go out if they can't raise more capital, I would never, accept a position without knowing those things. And in terms of, what role you're stepping into and what you can ask for, how key is your role? How senior is your role? How many employees does a business have? And again, digging really into that employee equity pool. And by the way, if this is a business and you don't see yourself staying there for more than a year because of culture or, whatever have you, you're not going to be there beyond the 1 year, then the equity is not going to mean anything because you're not even going to be there beyond the cliff. Ask yourself these questions. And as an advisor or, maybe it's a board member, but consistently I am seeing, right, lack of people digging into these investor type questions, really key questions to make sure it's a strategic position, role, seat they're stepping into. Would you invest in this business? If you're going to take equity for your work time, all that energy, would you invest in that business? And what's the offer? Have you really dug into the valuation? Think about the value of your invested time. So you can reverse engineer back into the calculation of, well, they're telling me it's going to be roughly 30 hours a year for this board seat. My hour is worth, $300 on paper per hour consulting. Great. Back into what percentage of the business should I have based on, what is the current valuation? And I say last valuation, but maybe the company's done a bunch since. So maybe the valuation's higher. But is it realistic? We're going to have more examples. So let me move on from here. A bunch of things to think about is you don't have to write a check today. You can navigate into equity ownership through these board and advisory roles, or, again, as an employee. You don't have to be an accredited investor for employee equity or advisory equity. You can't write a check for a board seat if you're not accredited. If you're not an accredited investor, and that you can look into the SEC, the exact definition, but basically a certain amount of income or a certain amount of net worth, if you're not accredited, you can't write a check to buy a board seat, right? You can't write a check to be an investor. But if they say, here's, equity for your work, or here's an options package for, you being an employee, and you ultimately leave the company and you pay and you say, I think it's worth it and I want to exercise my options, you don't have to be accredited to do that. And by the way, if you're in the position of you can write the check to buy those options, you've been at that company for what, at least a year. Hopefully you have a pretty good handle on, are they doing well? How do they execute? Let's call it diligence, right? Diligence is something that investors do before they write a check. You as an employee, you don't see all of it. And again, you should ask the questions when you're on, good terms before you leave. But basically, you can do your own diligence as an employee at a very different level. But thinking about that equity ownership, right? What can you expect or ask for? You really need to dig into valuation. And there's so many questions and things that you want to, dig into to figure that out. Now let's talk about actual examples. So the, scenario one is the advisory or board equity. And I know somebody asked about cliff before. I've seen a 3-month and a 6-month cliff with multi-year vesting. I've had scenarios with no cliff. When is there a scenario with no cliff? And let's again, why is the cliff even there? I don't want to just give away ownership in the business. We need to make sure we're aligned. Is this person going to work? If you've already worked with that individual, if you've already seen their competency, if they've already added value, maybe, you're going to negotiate for no cliff. Is that unheard of? No. Is it common? Maybe not. But just things to think about, because again, every scenario is unique. So I'm not going to give you some slide that says, you should always get 0.5% when you step into this role. Like that doesn't make sense, right? What's the stage of the business? What was the last valuation? What's the expected time commit? What are you bringing? So it's really making you knowledgeable on what are these questions you should be asking. And every time you think about stepping into a board role, an advisory role, would you invest in the business? Think about it like that. And maybe you throw that one out the window because you say, gosh, this is a mental health tech business. I love mental health. I love mental health tech. Or maybe you're doing it, because you just want to. Maybe you say, you know what, for my resume, I'm taking this seat. Great. But do that thought work so you don't step into it and say, well, damn, I need to walk away, or I can't do this, or I don't want to do this. I wasted my time, right? You don't want that. Let's talk about buying a board seat. This is a huge one that, I'm hearing again and again. I'm getting a million invites to join boards. Wow. Somebody reached out to you on LinkedIn. Looks like they have a real business and they're offering you a board seat. Or maybe an advisory board seat. What's the difference? An advisory board, again, is a ad hoc. Maybe we'll jump on and do, one-off calls. Maybe you make introductions. There's some, expected commit, but it's not a more formal, you're getting together as a group in a boardroom, even a virtual boardroom. So I see a lot of decks, a lot of, founders pitching that say, okay, here's our advisory board, here's our board. The truth is a lot of those advisors aren't doing that much. Some of them aren't doing anything. Sometimes it's just, having a headshot there. It's a little bit sad and unfortunate. But what I'm basically saying is, if somebody reaches out to you and says, hey, I have a business. You look great. It's a, $10,000 to buy an advisory seat with us. Are you up for it? Does that feel like a pat in the back, a compliment, a virtual hug, whatever? Maybe. Please dig in. Don't just write a check. Again, maybe you want to support this thing, but if you're not digging in, and let's talk about some of these additional questions I would ask in the scenario of buying a board seat. Why are they reaching out to you? I don't mean that in a bad way. How many people are they using automation to reach out to on LinkedIn, right? Why do they need your $10,000? Because my guess is their burn or how much they're spending monthly, they're just trying to get some cash in the door. But what's $10,000 when, a typical Series A, they're raising millions, or a pre-seed or a, seed plus, it's hundreds of thousands. What's your $10,000 going to do? Keep the lights on for another week? What's the value add you bring? And if they are looking at your LinkedIn, is it truly something that looks aligned? Why did they reach out to you? Again, not to be too skeptical, but, be wary and ask the questions and dig in. And if they're having a really hard time raising, they might just be trying to tap 10 heads where they can get 10 checks. What does their balance sheet look like? BS balance sheet. How much cash do they have? What's the runway, right? What's the burn? Dig into this kind of stuff. Or again, are they just trying to take advantage of, or, try to get a few checks in? Is it even a real business? There's so much diligence we do at our investment group before we actually allocate. It's really important to get in that headspace, do the diligence before you send the funds. And then depending on the stage of business, and even if you did ultimately write the check, I have written a check for a board seat, and I love supporting this woman's business. And I love our board meetings, our small board meetings, right? They're strategic, they're fun, she's great. We really enjoy, what we do. And in addition to me writing the check, I additionally got equity comp for my board work. So why would I just, write a check? Because you're also giving something to the business. And does it move to a cash comp when the business is big enough or when the business, is now profitable? I'll give you another example. I stepped into a board role with a business that was going through some private equity, some really tough things. And I'll disclose the numbers publicly. I got $5,000 a quarter. They were, over 10 million top line, meaning, revenues were over $10 million a year. And they were going through a potential, way to sell it. And ultimately it was, okay, well, we're going to also give equity comp. And that didn't actually work out. But the point was having the discussions and figuring out what's the stage, what's the commensurate, what makes sense in terms of the comp you're getting. All right. I know we've had a lot of discussions, so we're going a little bit long, but let's run through another one. A turnaround exec. Brian, I want to give you an offer to come into this company. We're going through some really tough changes, private equity firm. We're the private equity firm. We came in and we're operationalizing and we need a new CEO. And you have a great background and gosh, it didn't work with the last few. What? Didn't work with the last few? How many attempts? How long were they there? Because if I'm offering you a 1-year cliff on a really big equity package, but the last 2 execs were there for 2 months and 6 months, wow, alarm bells, right? Negotiate. Understand, what is the potential or probable, situation we're going to be in. And I know multiple folks, and I will say multiple women that have written a check alongside accepting an executive role, a CEO role. And I kind of hate it. Can I say that again? I kind of hate it. I don't want you thinking you have to write a check to get a big role. And think about it. How many eggs are in that one basket? If that's your lifeblood, you're, getting that salary from that company, and you also wrote a really big check into that company. And I know CEOs, women, who additionally funded with another check. And I say this in, from a place of well-meaning, I want you to learn from that. If the company can't raise, why do you keep writing checks? I know you believe in it. You're already there as a CEO, right? Be really careful. Thanks for weighing in, Ellison. Okay, so let's get through the next few. I guess quickly, investors get rewarded. Immediate ownership, something to think about, less time intensive. You're not just exposure to that one business or those 2 businesses, but however many checks you write. Influence is huge. We need more representation and, access, growth. And then, what I have on this next slide is informed decision-making. If you are an investor and you start to look at different businesses and you start to really dig into, when do I want to write a check? When do I not? When do I want to run? Guess what? You're not going to be coming to me saying, hey, Nat, guess what? I got this great role. And then we talk about it and then you're less excited. You're going to say, Nat, I said no to that role and I got a better role, right? So really, by stepping in and starting to think like an investor and even participate like an investor, you're going to learn so much more and you're going to be so much better at making these decisions. Quick look at the portfolio of what we've invested in. I'll give a quick shout out that a lot of these are women-owned and diverse-owned and just doing incredible things. I think across the board, there's like an impact piece. But what I wanted to say is, and this is huge, huge headline, it is proven data-driven proven, you can improve your negotiation skills. And I'm going to say you can improve your investment skills, right? Stepping in, participating, trying. Just because it's scary to try something new, you're going to get better at it, right? That whole thing. And I had another conversation with somebody the other day about dating. Young boys, and maybe it's a generational thing and it's different now, but I'm, I guess, an older millennial. Growing up, the boys would ask the girls out. I don't know what it is. I found out I was neurodivergent. I've always been more comfortable in that kind of odd space of getting to know and, push back. But boys learn from a young age, rejection, failure, growing from that. I can ask for the thing. And a lot of young girls didn't. And women have a different mindset, scarcity mindset with money, right? So recognizing these things, you can change them and you can evolve the way that you show up. Make sure you do that legwork. And then, I'd say learn by doing. You're not just going to learn it theoretically. So try, test, do a demo with a friend, whatever it is. So this was great. I'll stay on for, more questions. I know we're a little bit over time, but a few resources up. I'd mentioned quickly, we have an upcoming pitch day, which Rachel, give me a big smile because it's, what do you call it? Your favorite holidays of the year. We, source and screen and find a bunch of great businesses. Again, majority are women owned that we're investing in and, doing great things. And in our group, anybody can be a deal maker and a deal leader. We have a path to learning and access. We host regular office hours. And that's what we had prepared. So let me stop the screen share. And this was a lot of fun. I love the questions. They were really good. Oh, now I get to see some more faces. Kelsey, Allison, what's up? Allison's tea. Allison put a link in the chat to what you do. Her tea has been getting me through my my sports injury. Her inflammation tea. Thank you. But this was a lot of fun and I love seeing some new faces. Thanks, Edong. Thanks, Beatrice. Any more questions? We covered a lot. Oh, there we go. So I would love, Angela, if you could define that perspective on phantom equity. I actually don't know what that is.
That's even more concerning. So one of the structures that was presented to me in an offer that I had as an employee of the company was they have a cap table and they have equity that they doled out, but they have a section that they've carved out for phantom equity. So for executives that they've on board, that's what they were providing. What they said to me was there's less of a tax burden on the business and you.
I see.
So I'm
deferred.
Curious about somebody else's perspective on that. I hadn't heard.
Yeah, I've seen deferred, and I'm just looking it up as well. I would dig into somebody who's had that. I'll give you the example, which is I was working for an Israeli company, and they deferred issuing me the package for tax reasons, and also they were setting up, another entity in the States. And ultimately, it all worked out. But I would just dig into, the why and, what the mechanics are and what that deferral, timeline would look like. And also, understand, is this helping them tax-wise? What's going to do for you tax-wise? Really important things. And I'll give you an example, which is the company that I joined had a certain valuation when I joined, and then they did another raise. And depending on when you get your equity or your ownership, you may have a taxable event. So it's advantageous for the individual to get in without that increase in taxable event. So yeah, there's definitely things you want to look into there.
Thank you.
Yeah. And then it looks like we had another, I don't know if this is a comment or question, Deb. I found that high quality advisors want to contribute in a specific way as a way to gain access to the company decision-making to decide if they want to be involved further as an investor or more. Great point. I love that. And I think fractional executive work, contractor work can be a really good, again, diligence, try out, for the person and the business, before stepping into more. I would be a little wary that, I don't want somebody to say, hey, I might write a check for 50,000. I need this advisory role and blah, 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 blah. If they don't have the skills to be a good advisor, how much do you have to give away as an advisor, to give them the advisory role? So just think about incentives and think about, who is the person, what's the alignment. But it's a really good point, which is it could be a really nice way to run some diligence and to see for the company and the individual. Yeah. So who's stepping into a new board or advisory role after this? Or stepping up an equity package? Come on. Maybe someone? Well, you can report back. Me, I love it, Simone. That's what I want to see. And Simone is a new mom. I mean, now at this point, maybe 6 months in. I love it, Simone.
He's a year. He'll be
a year.
On Saturday. Oh, on the 31st. Yeah.
Stop it. It's time flies when you're having a good time investing with women, right? Can I say that?
Exactly.
I love that. Brian's calling out Kelsey. I love it. Great. Well, it was so nice to see your faces. I'm gonna go get back to, excuse me, more PT and stop the recording. But yeah, you have questions, comments, you want to join us at She's Independent if you're not already involved, because a lot of you are. See you there. Bye, y'all.